On behalf of DHA Education System, I welcome you all in Cambridge 1, Week 5, Accounting 7707 class. Hope you all are good and spending quality time in your homes in this lockdown. Let's come to today's objectives. In this session, we will review the concepts taught in the previous sessions. Then we will explain the concept of inventory, explain why it is inappropriate to use an inventory account to record increase and decrease in inventory, describe the two causes of inventory increasing, describe the two causes of inventory decreasing, explain the difference between purchase account and return inward account, explain the difference between sales account and returns outward account, and explain the differences in the recording sales on credit as compared to recording sales at a paid off immediately in cash. So let's begin. The review of the previous lessons. First of all, we discussed accounting process. The process of identifying, measuring, and communicating economic information to permit informed judgments and decisions by users of that information. Then we discussed the accounting cycle. Accounting cycle starts from the transaction, that is the source document, and it ends on preparation of the financial statements. Means we record every transaction, we apply the accounting procedures on them, we make the journals, ledgers, then we make the trial balance, and in the end we prepare the financial statements. Those are statement of financial position or income statement, which are included in your syllabus. Accounting equation. Assets equal to liabilities plus capital. We have discussed this equation many times. And assets equal to liability plus owner equity in the case of sole proprietor, and assets equal to liabilities plus shareholders equity in case of corporation. The type of accounts which we have discussed, there are 5 main types of accounts: assets, liabilities, equity, revenues, and expenses. Then we discuss double entry accounting. In double entry accounting, based on the simple concept that every transaction has dual effect, means in every transaction something is increasing and in return something is decreasing. The conclusion of the double entry system is when assets are increasing, they are always debit, whereas liabilities and capital, when they increase, they will be credit, and the debit will always equal to credit. The T accounts are the visual representations of the accounts which we make, and T account has two sides, left hand side and the right hand side. Left hand side is for the debit side and the right hand side is for the credit side. And when we have a transaction, let's suppose purchase of a machinery by cash $10,000, debit machine $10,000, and credit cash $10,000, we will make 2 T accounts from this particular transaction, machine and cash, and machine will be debit, and we will show the counter account as well in this T account, whereas in the cash 10,000 is crediting, but we will show the counter account in this T account as well. Then we discussed assets are the resources which are using in any business to do its operations, and on the basis of their lifespan, assets are divided into 2 main categories: current assets and long-term on fixed assets. The current assets have the life less than 1 year, whereas fixed assets have the life more than 1 year, and the more fixed assets having the example of land, building, machinery, equipment, fixture, fitting, vehicles, motors, etc. They are the less liquid resources as compared to the current assets, whereas current assets are more liquid accounts, means we can use them immediately at when we are requiring them. The current assets are cash, bank, account receivable, and the fourth one is inventory. Now, all these terms are can be easily comprehended, but the one thing which is what is inventory, so we will discuss it in detail. Okay, what we understand by the term inventory. Inventory is the collection of unsold products waiting to be sold. Inventory is listed as a current asset on company's balance sheet. In any business or organization, all functions are interlinked and connected to each other and are often overlapping. Some key aspects like supply chain management, logistics, and inventory form the backbone of the business delivery functions. Therefore, these functions are extremely important to marketing managers as well as finance controllers. Inventory management is very important function that determines the health of the supply chain as well as the impact of financial health of the balance sheet. Every organization consisting strive of maintain optimum inventory to be able to meet its requirements and avoid over or under inventory that can impact the financial figures. The basic requirement for containing an item in inventory is economic controller rather than physical possession. Therefore, when company purchases inventory, the item is included in purchaser's inventory even if the purchaser does not have the physical possession of that item. Inventory is usually classified in its own categories as an asset on the balance sheet, as I have discussed. Following receivables, it is important to note that the balance sheet's inventory account should also reflect costs directly or indirectly incurred in making an item ready for sale, including the purchase price of the item as well as the freights receiving, upkeeping, inspecting, storage, maintenance, insurance, taxes, and other costs associated with it. Inventory is commonly thought of an finished good of the company, whereas we have different type of inventories. We can have the inventory input, means the raw materials. We can have the inventory in the process, means work in process, the semi-finished goods, and we can have the inventory in the form of finished goods also. Now, why companies maintain inventories? There are generally 5 reasons companies maintain their inventories. Number 1, to meet an anticipated increase in demand. Number 2, to protect against unanticipated increase in demand. Number 3, to take advantage of price breaks for ordering new materials in bulk. Number 4, to prevent of the whole factory if one part of the process breaks down. And number 5, to keep a steady stream of materials flowing to retailers rather than making a single shipment of goods to retailers. Inventory can also be used as collateral to obtain finances in some cases. Now, why it matters? Inventory is a key component of calculating cost of goods sold, which we will discuss in detail when we will make the income statement of the organizations, and the different methods for calculating inventory like LIFO, FIFO. LIFO means last in first out, FIFO first in first out. You will study in C2 inshallah, but at this point the introduction of inventory will be sufficient for you people. Now, explain why it is inappropriate to use an inventory account to record increase and decrease in inventory. Now, when there is increase in inventory, we have purchase of additional goods and the return into the business of goods previously sold. Means there are two different aspects of this increase of the inventory. When we are purchasing the inventory, we will deal the account of purchase, whereas when we have the return of the inventory, we will deal the account return inwards. Whereas in decrease of the inventory, we will have again the two aspects, the sale of the goods or return outwards. When we are selling the inventory, we will deal the account of sales, and when we are returning the inventory, we will deal the account return outwards, right? Then we will discuss purchase and sale of inventory on cash and purchase and sale of inventory on credit. Now I will explain all these transactions through the transaction and the T account for the better understanding. The number one, purchase of goods by cash, $10,000. We will do the transaction for this entry is transaction will be debit purchases and credit cash, and we will create two accounts, purchases and cash in front of you. Then purchase of goods on credit, debit purchases, credit accounts payable. Then return goods to D small, D small is the name of any supplier. Okay? Then the entry will be debit account payables, credit return outwards. Sale of goods on cash, debit cash, credit sales. Sale of goods on credit, debit account receivables, credit sales. And return goods from any supplier, the debit return inwards and credit account payables. I have included one worked example from your book, Business Accounting Frankfurt. All the transactions are written and the related T accounts are also mentioned over here. And I will always suggest my students to do the entry for having the better understanding of the concept and avoid the mistakes. This was all about. Let's do the quick recap. We reviewed the concept taught in the previous sessions. Then we explained the concept of inventory. Then we discussed why it is inappropriate to use inventory account to record increase and decrease in account. We discussed the two causes of inventory increasing, two causes of inventory decreasing. We explained the difference between purchase account and in return inward account, and sale account and return outward account. And we discussed the differences in recording sales on credit or purchase on credit as compared to cash. The home assignments which I am giving to you people, read the whole chapter number 3 thoroughly and highlight the important points and complete the worksheet based on the review exercises of chapter 3, which is attached with this lesson on the DHA portal. Please try to attempt it, and in the next session I will share the key of this worksheet as well with you people. In the coming session, we will explain the effect of profit or loss on capital, then double entry system for expense and revenues, and balancing of accounts. And after that, the most important thing is I will discuss with you people the paper pattern of accounts of CAIE and in-house examination and syllabus for first term and midterm examination. For your questions to solve your ambiguities and confusions, you people can contact me on romana_aziz2003@yahoo.com. So stay safe, stay home, do the scheduled studies, offer namaz regularly, follow the instructions of your parents. Hope for the good days. Take care. Allah Hafiz.